Centum's Mortgage Monitor. Now, it could have been out for a while. It came across my desk just this week. I think it is relatively new, but if anybody on the Centum team's listening and wants to correct me, please do. So this Mortgage Monitor, they call it a client engagement tool. And there's a couple really important parts about it. Basically, what it does is it's a communication platform. It gets data in. Now, they really make it clear that it's platform agnostic. So I would assume it means if you're using Finmo, Filogix, Velocity, whatever you're using, it can get that data into this platform. What it can do is send out regular updates to your clients. Really talk about three things here. I'm just reading off their screen. They talk about home value updates. So we'll get back to that one in a second. Personalized product and rate analysis. So the rate that they're at, how competitive is it? Potential optimization opportunities there. And then protection support. I'm not totally sure what that one is, but hey, that's what they list out here. So it's pretty cool. Now, the first thing I want to highlight is that the platform itself is, again, this thing about sending out regular home values to clients so people know how much equity is in their home. And I would say that that's very similar to a couple of the products we talked about a few weeks ago, those being BrokerBot and OwnWell. These are two new startups coming to the market. Again, not to do spoilers, but we are chatting or lining up chats with folks from those companies in the coming weeks, and that's going to be a really interesting discussion. But it seems like Centum as a network is coming out with a competitor, and I think that's very interesting. First of all, that it's a third player in the space, and so now really the race is on. I think any type of race is great for a consumer. It's just going to be, who can provide the best value for the best price, right? And many people are competing. It just creates that much better of a scenario for the end consumer. So hopefully the people listening here today. The other thing that I thought was super, super interesting is that on their page in their FAQs, it's the normal ones you would expect. But if I go down, okay, why do you do it? What is this fixed rate? Sure, whatever. But the one of the FAQs is what happens if the AVMs, the automatic valuation model, so the thing that actually determines the home value, is unavailable. That's cool, first of all, that it's even an FAQ tells me that that's a real concern, that's possible. And they have an answer that says, hey, they can dynamically adjust the report, so it just excludes that part of it. But again, it's interesting that these AVMs, this really is going to be, I think, the crux of all these tools, who can provide the most accurate AVM, but also can do it for the best price and most reliably. That's what this FAQ tells me, is that it's not only an issue of accuracy and cost, but it's also an issue of reliability, right? If you're sending out these reports and no one's ever getting anything in terms of the value in their home, then what's really the point, right? And so this reliability is going to be so important. So these three factors, and these AVMs, they are pricey. I know, just chatting with a couple of these firms, and we'll get into the details probably knowing more in these subsequent podcasts, but they are pricey. And I think it's going to be the make or break for a lot of these companies who can get the best AVMs. I do know that in the States, it's a slightly different animal. And just to draw that parallel, they have these aggregators. So people who go out and basically just ask for every single property in America. At least this is my understanding. And then they just have a database of all these AVMs that they can sell for a lot lower price, because then it just becomes fixed and they can start selling it wholesale to a lot of different people. Right now in Canada, at least how I understand it again, is that when an AVM is requested, the model actually runs at that time. It's on request, right? Like it's a suit that's made to order or address. Hey, I want this AVM. The model runs, spits back a value, and there's the cost that's generated at the time. Whereas in the States, they say, hey, instead of made to order, we're just going to have a rack of dresses and suits, right? And so we're going to run all the model across everything all at once. We're going to get back all the values. And so anybody can come in and just take it off the rack. So I don't know if that's cheaper. It probably does become cheaper when you get to a certain volume. And so is it possible in Canada to get to that volume? I don't know really, but I think that's an interesting opportunity for anyone out there saying, okay, what opportunities exist in Canadian real estate tech? Maybe there's a play there. I don't know. But the other thing about it too is maybe some of these models won't want you to do that, right? If I'm going and saying, hey, just give me all your models, they'll say, wait a second, what are you doing with these numbers? And is that going to cannibalize my own business? I'm going to run all these models, and then you're just going to sell to my customers, whereas I can maybe make more money just selling directly to them. So it's an interesting kind of paradigm there, but I would say that, hey, in the long term, that seems to have been where the US settled. And usually in Canada, if you want to know where the tech is going, it's usually best to look south. And that's what it is. And so, yeah, I would say that as these things become cheaper and more accessible, that should be something on everyone's radar of how are these AVMs pricing, and is there an opportunity to maybe do this type of aggregation model where you bring everything together and sell it, or resell it, I should say, on the wholesale.